Hey, this is Sasha, and thanks for joining me here for another episode of Let's Talk Stocks. Today we're going to go back into some basics of technical analysis. We're going to take a look at the triple bottom reversal pattern. So keep in mind, patterns can be continuation to where they continue the trend or reverse the trend from where they're coming from. So we're going to look at 6 main things. What does it look like? Previous trend, volume, some projections, entry points, and some tips beyond the pattern. So the triple bottom, really it stems from hitting 3 bottoms, okay? Similar to the double bottom. So if you know about the double bottom, this is going to be very similar. So if we look at our kind of supporting point, it's going to hit a couple of points here. So it starts out with a downward trend. So this is our previous trend. So it kind of moves here. We have this downward trend. And this is our first kind of bottom that we hit. So as we move here in the downward pattern, there's a lot of selling pressure that goes into the stock. Now, eventually you get to a point where there are buyers that want to step in. They say, hey, it's a good value on the stock, so it may go ahead and do a little bit of a bounce here. And then other people say, hey, I'm glad to get out of this stock, so it bounced, so I'm ready to get out because it'll probably continue moving lower. So it goes ahead and hits another bottom point. So this is kind of our second bottom. Keep in mind, this is our support point or support level here that's being created. Now, this also starts to create a little bit of resistance up top. So this is our resistance number 1. And then again, we could go ahead and try and get up to those upper prices because people are, again, buying it on value, but maybe it doesn't make it that far. So we go and create kind of a triple bottom there. So this will be our third kind of bottom. And eventually, this stock, what it tends to do with this pattern is it eventually goes in and breaks out kind of past this resistance level. Now, sometimes this will come in and hit kind of a double top here. So this is one thing to watch out for that we'll talk about here in a minute. But in general, you got 3 bottoms here that are created, and then eventually the pattern reverses because it's a reversal pattern, and it continues moving into those higher prices. So that's kind of the pattern and the way that it looks. Now, if we're looking at volume, and when you look at the volume of this chart, you typically will want this volume to slow down as the stock is moving lower. Initially, it's going to be really high, especially if you're starting from really high prices. But with time, you want that to decrease because you want those prices to slow down and change direction. And to change direction, let's just say you're driving 50 miles an hour. How do you change direction? Well, you got to slow down and make a turn. Or, you got to have a really wide curve. And that's really what we're doing is we have some time here to make that turn and that curve. So to change that direction, we want to slow things down, okay, as we're coming in to bounce, right? Then when you bounce, you'll probably want a little more volume on the bullish side. So anytime you get these bounces, okay, you'll want more volume. And especially on this later bounce on the breakout, that volume should be good or huge on that breakout, especially breaking out of that resistance level. So that's kind of what you want the volume to be. And as we decline on these depreciating levels, as we pull back from resistance, you want those to be lighter because now you got more buyers that are coming in, more buyers stepping into the stock. And that's why the volume should be picking up to the buy side because we're going to reverse. Projection-wise, what you're looking for, it's a little difficult to project these movements because this stock could have been selling off from really high prices. So when you really get into a triple bottom, kind of like the double bottom, well, a basic projection might be, well, let's say I take this first or second supporting level and go up to the resistance. And when I do that, here's kind of my level or range. Well, then what I would do is just take that consolidation range and put it kind of from the break of the resistance to right there. And that could be my target or projection. But the reality is stocks normally appreciate with time and with inflation. They just continue to go into the moon. That's just the basic nature of stocks until you get the crash, of course. And then again, they keep inflating. That's inflation for you. So we could get back into those upper higher prices where the stock initially started the sell-off. And you might even go into even further higher prices into the future over the next 5 or 10 years, depending on how long you're looking to be in the stock or watching the stock. As far as entry points go, what you could do is you could get in on these bounces, but you don't know if these bounces will continue further to roll over into the next leg or the next down leg, because this could actually be a double top. It could even create a triple top, right? So you see how these patterns could actually look like something else. So instead, the better approach is wait for that breakout right there, and this could be your entry point, okay? Sometimes these patterns will come back, and let's just say they come back and retest, okay? So they're testing that support level, because before it was resistance, now it's support. And when that bounces, okay, that could be an entry point right there. So if you missed entry point 1, your second entry point could be right there on the next bounce as you come back to retest that level. So that could be another entry point. So to leave off with a few final tips, remember that this pattern is a reversal pattern. So as you're coming down the trend, okay, you're going to reverse eventually. You want that to slow down, and that you see it slowing down by watching the volume. And as you get bounces, you want that volume to pick up, let's say this peak to start to pick up a little more volume, this peak possibly to be a little bigger than the last peak. It doesn't always happen. And then again, as you break out past that resistance, you want even more volume. So that's a tip. But remember that this could also look like a double top or a triple top pattern where this thing could actually continue and roll over even further. So that's why you're waiting for that entry point on those breaks to really confirm which direction this stock is moving. Otherwise, you might get a movement in an unexpected direction. Because remember, the pattern won't be called that pattern until this kind of completes itself. But in order for you to do the trade, you have to do it almost early enough to get in on it to capitalize and profit from it. So anyways, I hope this was helpful and insightful on the triple bottom reversal pattern. All right, so let's take a look at the triple bottom stock chart pattern. And here I want to share with you a little example as we go on the charts and on screen. So here's a triple bottom reversal. So keep in mind, we're starting from upper prices or higher prices. We get into the swing point of December. This is APC. We get into about the $13 price level. Then what you have is it's hitting a couple of points. Not all of them are perfect in hitting this $13 level. In fact, you could almost say that it's somewhat moving to the upside a little bit. But nevertheless, it's very close. They're starting to build momentum. So about $13. You can see that triple bottom. It's not perfect that gets hit. You also have a resistance right around the $16 level. And eventually that stock breaks out past that $16 price point on volume. So you can see volume picks up after we digest. And that's usually what you want to see when you're looking at a breakout or momentum. Of course, you could enter a little bit earlier at one of these bottoms, but you really don't know if this stock will roll over at any one of these bottom peaks, even though you can see that from the previous or the first swing point, this might be a nice entry opportunity. Let's look at another example here. And if we look, here's another kind of a quadruple bottom in a way, but we'll call it a triple bottom here. If you take a look here as well, this is MS or Morgan Stanley around September 2011, 2012. We go into lower prices about the $12 range and we hit our first bottom. We hit another bottom just shortly after that, probably about a month later. And then we get into another bottom around June and August. So we hit it multiple times. That stock attempts to break out at $20. And you can see we weren't able to do that with some resistance overhead. Eventually, with time, we did get a little bit of volume that picked up. So if you take a look at the volume that's picking up, you can see right before we get into the year 2013, it starts to pick up. Otherwise, we do have a little bit of a decrease in volume, not major decrease, but a little bit of decrease. So that stock, picks up that volume and eventually breaks through. But then we lose that steam, we come back to retest things, and then we finally get that bounce. So your entry points would be after it breaks that resistance, or somewhere right after we get that confirmation bounce at support. So those are a few things to look at here on this example. And if we take a look here at one more, looking at a double bottom here, you can see this is lows. We've hit this bottom area 2 times, so very similar to the triple bottom. Just to show you an example how this one looks, you can see we have similar concepts: support, resistance, stock attempts to break out. The volume here on the breakout's a little bit weaker, so that's a little bit of a concern, but you can see there we have kind of 2 bottoms. So nevertheless, the 3 bottoms and the quadruple bottom there that I showed you, they're all very similar in terms of the chart pattern, and they're all coming in. They're usually a reversal pattern coming in from higher prices. They come in, they digest the move, and then they move back into higher prices again. Thank you so much for joining me in this week's video. I hope you found this pattern and example helpful to your trading and chart reading skills. If you want to join me on the newsletter list so that way you get notified as we release new videos, then go ahead and click the link right over here and you'll be taken to enter your name and email address so that way you can get notified as we release new content, get discounts on products, books, or look at the detailed courses that we offer. Or by all means, feel free to just hang out on YouTube by just clicking the face circle right below this video. Thanks again, and I'll see you next time.